Hello and welcome to our special coverage of Econ Talk. And today we focus on China's recovery in a time when the global economy is entering a recession. So after China reopened its borders, a burst of confidence was felt by the world. Investment banks soon raised their forecasts for China's GDP growth to above 5%, while the consensus among economists forecasts positive growth in China, with the latest IMF's report warns of rising global uncertainties and fragmentation risks, the cost of living crisis, and high debt levels. So how to pave the way for cooperation amid global surge in new trade restrictions, and how will China's reopening up boost the world economy? Join us today is our distinguished guest, Mr. Lin Jianhai, former Secretary of IMF and Vice President of the International Finance Forum from Washington, D.C. Welcome to the show, Professor Lin. So we hope that your comments on the global economy and forecast for year 2023, can I get your take on that first?
Sure. Thank you so much. Good morning, Lily. It's so nice to be here and to see you. And I really enjoy your English program very much. So regarding the global economy, let me say in a nutshell, 2022 was a gloomy year. We don't know yet about 2023, but it will likely remain so, if not gloomier. So let me quote just a few numbers for our audience. In 2021, IMF said the world economy grew by 6.1%, a quite strong recovery from the 2020 COVID pandemic. There is no final number yet for 2022. But my guess is that the world growth rate could be as low as just half of that of 2021, or even less. So when we look around, many countries encountered economic difficulties, as we know, and most were experiencing much weaker growth rates than the previous year. So 2023 will remain challenging. That's my view. IMF's earlier projections showed that 1/3 of economies could fall into recession this year, meaning 2023, and also said a harder time might be still ahead. Last week, the World Bank also slashed its 2023 growth forecasts to levels close to recession for many economies. And more so, according to a survey just released by the World Economic Forum in Davos earlier this week, 2/3 of the private and the public sector chief economists surveyed believe that a global recession in 2023 will likely happen. And with 18% of them believing that it's extremely likely that it will happen. So this number was twice as many as in a previous survey conducted by the World Economic Forum in September 2022, only 3 or 4 months ago. So however, it's also interesting, really, to note in the recent days in Davos, if we read the stories about Davos, some observers were a bit more optimistic. They say that there are signs of resilience in the global economy and that inflation may be peaking. So the overall tone is that 2023 could still be a tough year, but may not be as bad as we had all feared early on. So that's kind of a little bit changed in my view. And also the IMF managing director told Davos that the low growth rate may bottom out later this year, and 2024 could be a year that we finally see the economy on the upside. So therefore, as you can see, basically the opinion and also the projections vary widely, everywhere, and also changing very fast. So therefore, it is important, in my view, to keep an eye on what is going on and how people feel. It's important to do so on a going basis. So clearly, where we will land in 2023, we don't know yet, to be seen. But the
So,
uncertainty is great. Thank you.
yeah, so you were saying that widely a recession is expected in year 2023. However, there are signs of resilience according to some economists. So, Dr. Lin, my question is, what do you think are the key challenges that the global economy is facing this year?
Great question. Great question. Well, when I look at this issue or question, I tend to look at what factors that made 2022 a bad year, quite miserable for all populations. And to me, these factors are still with us now. What are they? I see at least 4 or 5. First, the impact of the COVID-19 legacy, which is still with us today. Second, the Russian and Ukraine war. Third, rising geopolitical tensions. Fourth, the dramatic monetary policy tightening in major advanced economies, particularly, as we all know, by the US Fed and ECB. Number 5, the debt stress facing a number of emerging market and low-income countries. And the list goes on. But let's hope that 2023 may overshoot our fears and that economic pessimism may be overdone. I really hope so. We don't know yet, as I said, so we have to wait and see. Now, one thing is quite clear, Lily, I must say so, that we are facing something I called 1 low and 3 highs. What are they? Low growth, high inflation, high debt, and high fragmentation. So these things, combination of these things, is pretty dangerous, undermining investment, consumption, economic activities, affecting our lives. So that's affecting the global economy in a big negative way. So to me, these 1 low and 3 highs will likely be with us for much longer.
So, Dr. Lin, let's zoom in on China now. By the time that we do this interview, we already got the full year economic number out of China. How would you comment on China's economic performance in year 2022 and also the impact from pandemic? Many provinces in China have said that they have already actually passed the peak of the COVID-19 infections. What does that mean for business activities?
Well, let me try. It's clearly it's very important. China economy is very important also to the world economy. Last year, we all know that China also suffered huge economic difficulties, partly because of the COVID that affected mobility and economic activity, but also because of the weak performance in, say, the property sector. Growth was 3%, which is among the lowest in the past many years, but better than most market observers had expected. So, while looking back may be necessary, but I think it's more important to look ahead. I'm typically a forward-looking person. So let's look into 2023. Now, China's economy may remain difficult in the first few months of the year, but in my view, growth is expected to pick up from the second quarter onward as the waves of COVID-19 subside. Rebound could be quick and swift because the lockdown in the past 3 years has really created a huge pent-up demand. So I would expect a fast resumption of domestic consumption and, of course, of also other economic activities. For the year as a whole, various projections point to a growth rate of about 5% or even higher, as you mentioned. So we'll see how it will turn out, but let's hope for the best. I personally will not be terribly surprised if these projections will be exceeded, will be topped.
So, Dr. Lin, we know that China has been loosening its COVID rules for just a bit over a month now. Seems like many things need a reboot right now in short term. So what are the short-term challenges that we are facing? How shall we respond to them?
So looking at the short term, I think it is most important that China needs to restore confidence. This includes policies to support economic recovery in the short term, and also actions to address the ongoing property crisis. As we all know, the property sector is very important in the Chinese economy. So let me borrow three numbers for all of us to remember. It accounts for 40% of total bank loans, 50% of local government revenues, and 60% of household assets. So addressing this sector problem decisively will minimize the potential for spillovers to other sectors and also adverse macro financial feedback loops. Policy actions will also need to be taken or continue to be taken to strengthen private sector activity and growth, and also make the private sector an engine of economic growth in the long term. Now, the good news is that, as I see it, China has some policy space to counteract growth headwinds. Macroeconomic policy support can boost the long-term growth. Given the large slack in the economy and also still low inflation, a shift in fiscal policy support toward households and also some additional monetary policy easing will be very helpful to the short-term recovery in the months ahead.
Dr. Lin, let's zoom in on the economic implications of China's reopening its borders. We know there's going to be an increased flow of people and goods in and out of China. What does that mean for global businesses? As expected, some are saying, of course, China will be needing a lot more imported goods, services, et cetera, and vice versa.
I agree. Clearly, China's reopening from COVID will strongly spur domestic demand, as I just said, both investment and consumption. So this is a big welcome news for the world economy. As we've heard a lot about the discussions going on in Davos in the past few days, which is still ongoing. Lots of these discussions have been focusing on China's growth prospects in 2023 and how they can help the global economy. So looking back, may be helpful to look back a little bit. Since the global financial crisis in 2008 through 2020, just before the pandemic happened, China contributed about 1/3 to total global growth, which was a big number. Now, whether China can restore that level of contribution is to be seen. But its economic recovery will surely help stabilize supply chains, raise demand for all kinds of goods, global goods and services, including international tourism to be taken by many Chinese citizens. So in short, in my view, China's reopening from COVID is a big welcome news and also an excellent news for the world economy.
Dr. Lin, speaking of China's growth pattern, we know that China has shifted its strategy from a period of high-speed growth now to high-quality growth. So which sectors and industries do you think will be benefiting from this strategy, and which ones will be the key economic growth drivers for China going forward?
Well, short answer is I think all sectors will benefit from it. But let's be a little bit more precise or more specific. If we look at the traditional economic sectors, by international comparison, China's services sector, particularly financial sector, in my view, in my personal view, remains relatively less developed and has ample potential for growth. A well-developed financial sector requires market-based and transparent rules and regulations, strong institutional frameworks and oversight, and well-functioning markets with a variety of financial instruments and investment vehicles. So an open, transparent, market-based financial sector will serve the Chinese economy well in the long term to come. Now, more broadly, though, when you look at the world economy, the services sector, on average, accounts for about 2/3 of the economy. In advanced economies, this sector accounts for about 2/3 or even higher, about 80% of the total economy. In China, the services sector accounts for just over half of GDP, about 53%, I think, in 2021. So the potential for further growth is huge. Now, looking at the new areas of growth, a lot of new developments, I would emphasize the potential for digitalization and green transition related industries, as well as the medical sector. These three things, digital, green, and the medical sectors, cannot be emphasized enough. They are very important going forward. So all of them will also have a huge potential for future growth.
So once we have the strategy in hand, of course you need policy support for certain industries and sectors. So my question would be, I mean, in the past we've seen China, laying out, introducing a lot of policies, trying to balancing out, for instance, in between the urban and rural, the private sector and the public sector, et cetera, and et cetera. Going forward, Dr. Lin, what kind of policies do you think that we need at the moment to achieve what we wanted to achieve, a sustainable, inclusive, and high quality growth?
This is a great question. It's a very complicated question also. So probably I'll look at this question a little bit from more macro level point of view, if you don't mind. So if we look ahead into the next 5 years or longer, for China to realize high quality development and achieve sustainable, inclusive, and green economic growth, it must take the right policies. Personally, I see the following 5 areas may be very important. Number one, China must maintain a stable macroeconomic environment. So this means low, stable inflation and sustainable external conditions. So it sounds very easy, but clearly, a lot of efforts would have to be made to get it. 2, it must maintain and strengthen open door policy and efforts, as the Chinese leaders have said time and again. Experiences in China and elsewhere show clearly that open policies toward trade, capital, investment, technology, information, data flow, educational, cultural exchanges, whatever you can name it, are vital for a country to develop and prosper. 3, it must accelerate the pace of, I call, productivity growth in the medium and the long term. As we know clearly, productivity growth is a key engine of long-term sustainable economic growth. Sustained productivity growth will enable China to escape the middle income trap and enter into the high income country category. Now, how to achieve that? A lot of factors. I'll just name quickly: technology development, application, enhancing human resources, strengthening research development capabilities, implementing transparent, reliable rules and regulations, better allocation use of resources, and leveling the playing field between state-owned and the private sector firms can also go a long way in helping productivity growth. 4, as I mentioned earlier, it must also further develop its services sector, particularly the financial sector. 5, I think that's my final factor here, must also effectively address the impact of demographic shifts. In 2022, China's population already experienced negative growth, and China's working age population has already been declining. This is a huge long-term issue, which would affect China's growth potential enormously. So what can be done? I know I have a few thoughts. I don't know whether they are workable or not. One policy measure could be to gradually raise the retirement age to say 65 for both male and female workers. I said gradually, not just tomorrow. Second is to greatly enhance the quality of the labor force through education, on-job training, vocational training. This is particularly important, in the area of rapid technological and informational transformations as we all encounter today. So I'll stop here. Thank you.
Dr. Lin, so let's go back a little. So in the beginning, you talked about how the World Bank, the IMF, all those international financial institutions estimating a recession for the global economy this year. How can countries, I mean, other than China, other countries, what can they do to mitigate through this recession risks?
Not easy. Why so? Because so unfortunately, the world is currently suffering from multiple crises, not something, just one or two. So something, we call it a polycrisis. That is crisis upon crisis. In fact, this is not something we have seen in our generation. Now, what are these overlapping crises that will continue in 23 and beyond? I see the following. The first one is still the ongoing impact of COVID-19. The second one is the ongoing Russia-Ukraine war. The third one is the decelerating world growth, as I just mentioned earlier. Now, this slow pace of global growth means there will be little, if not negative, improvement in the standard of living for the world population, particularly those in low-income countries. Even in those countries, there could be a deterioration in poverty in many countries. So this is not good. The fourth one is the fight against inflation through massive monetary policy tightening, as we have seen, we have heard, we have been talking about. Now, clearly, this will not only have a big impact on the countries concerned, but also for developing countries through different channels. For example, the lower world demand for their goods and services, higher external borrowing costs, and higher debt service payments. The fifth crisis is the debt overhang problem. As we look around, for many emerging developing countries, addressing debt burdens will be one of the key economic challenges in the post-COVID period. For instance, right, we already know that crises in Sri Lanka, Pakistan, Chad, Zambia, Ghana, and some other countries. I still have three more crises. The sixth one is the rising fragmentation. This will hit the world economy very hard, particularly for those countries that are heavily trade dependent. Number 7 is a climate crisis. Now, climate crisis is both short and long-term in nature. Green transition will be an ongoing challenge for years and decades to come. Finally, the final crisis, as I can see, is the future pandemic. So COVID-19 has made the global nature of our health issue, well-being, very clear. Yet, we have not yet seen much evidence that the world is making efforts to be better prepared to prevent and contain future pandemics. So the world, in my view, must learn from COVID-19 and prepare for future pandemics with a global mindset. That's very important. Now, very quickly, so tackling a polycrisis like this clearly requires constructive engagement among all policy makers worldwide, including through multilateral fora, International Monetary Fund, World Bank, UN, WTO, right? It would be really so vital to avoid the most harmful scenarios if we don't engage, and we don't talk, and we don't work together. I'll stop here.
Well, yeah, indeed, that's a very complicated question, and thank you so much for your insights on that. I know you have been trying to be as brief as possible, but in the meantime, I wanted to get your thoughts on the inflationary pressure. I mean, all countries around the world are, including China, we are all under pressure of high inflation. What are your thoughts on that? I mean, China's consumer prices has been kept stable than the other countries. But in 2023, is that going to be going even higher, I mean, inflation, or do you think that's going to get under control? Because latest figure from the Fed and from some other economies are showing that consumer prices in some major economies are getting under control gradually.
Well, I agree with you that this issue has been among the most discussed and debated in the past year or so. So discussion, debate still ongoing, including Davos this week. As we recall, for a long time before COVID-19, inflation was not a problem. Inflation was subdued, and the challenge for policymakers worldwide, particularly in advanced economies, was to get it higher. I recall that in many meetings I attended in the period between 2008 and 2020, whether at the IMF or elsewhere, including at the annual meetings of the World Economic Forum in Davos. The question was, why inflation was so low when so much money was pumped into the economy by major central banks? So that was the question. But then, so interestingly, all of a sudden, in the second half of last year, 2021, not last year, 2021, the year before, inflation shot up to well above targets globally. So this has led a massive monetary policy tightening by major central banks, US, Fed, ECB in particular. So where do we stand now on inflation? If we look at headline numbers, the annual increase in consumer prices in the US peaked at 9.1% in June 2022. It was down to 6.5% December 2022, last month. More so, the CPI last month decreased by 0.1% from November last year. However, if we take the increase in prices of food and gasoline out, the so-called core inflation was still an increase about 0.3% in December from November, implying roughly a 5% increase annually. So in the US, while headline inflation may have peaked, core inflation is still pretty high. So that means that the major central banks will need to stay on course until more sustainable reduction in price levels is achieved, which may, in my view, still take some time through 2023. A tricky question is whether the US Fed will ever be able to bring core inflation down to the policy target of about 2%. If so, and when? So some market observers believe that based on the historical experience, for this to happen, unemployment in the US would need to be, rising to above 5%, which is currently just 3.6%. So for unemployment to rise, to contain every demand, therefore to contain the CPI increase. This would certainly be a very painful adjustment to the economy. It's interesting to note that at the meetings in Davos in the past few days, more and more people believe, or seem to believe, that the US economy may be able to avoid falling into recession in 2023. Or if that does happen, it could be a mild recession. On the other hand, that's the economists, on the one hand. On the other hand, however, On the other hand, some market observers also pointed out monetary policy typically operates with a lag. So the full effect of the policy tightening last year, 2022, will only be fully felt in 2023. Therefore, they caution that central banks must be very careful of not overshoot, not over-tightening the policy to avoid an unnecessary recessionary impact on the economy. So this topic, is really sort of interesting. Kind of involves a lot of thinking, academic, empirical policy, all from all different angles. Now, in terms of inflation in China, the annual rate increase last year was 2% in 2022. Most projections for this year point to slightly higher in 2023. Now, this is good news for China, as it will provide some policy space needed to further stimulating the economic recovery in the short term without worrying too much about the impact on the price level. So I'll stop here. Thank you.
Indeed, Dr. Lin. I mean, many analysts were saying that despite of a slower CPI growth in U.S., however, the Fed does not have enough evidence in numbers from the job market concerning, employment rate and wages. So hence, the Fed is unlikely to immediately shift its direction in policies. That's very much agreed. And now let's move on to the job market, since we're on that topic already. What do you think are the key policies that countries need to be taking to help people to feel more confident in job seeking, to help them to unleash either their purposes, their potential, or their dreams when they think about the future of the job? I mean, in year 2023, we're going to, in a few months, see in China as well, millions of graduates out of college, and they'll be seeking jobs.
It's a very good question. Particularly, you mentioned graduates. We were all students before, so job market clearly concern students in a particular way. So let me think through and probably offer a few observations from their point of view. So that is the future of work after COVID-19. So what kind of work or jobs might look like in the future? So let me mention 3 emergent features in the future. First, remote work will likely continue. Last year, McKinsey Global Institute did a good study on this topic. So let me cite a few numbers from their report to share with our audience. The report projected that in advanced economies, 20 to 25% of workers may likely choose to work from home or remotely in the future. That is, 2 or 3 days work from home, remotely, and 2 or 3 days in office. Personally, I feel a mix of work from office and remotely will likely stay longer or even permanent in some situations. If you do well, I think working remotely can be even more productive in many situations. So this is important to note because it will have important implications for many things, our work, life, society, different things, and also for fresh graduates. Second, digitalization will accelerate. So we all know that digital platforms are surging, right, everywhere, and basically for everything, which means that e-commerce could grow many more times faster than other businesses. Nowadays, we basically do everything online, searching for information, doing e-commerce, schoolwork, school assignments, right, among others. This trend will surely continue and intensify. Third feature is automation will also accelerate, meaning an increased use of robots, robotic process, automation, AI in manufacturing and services, although personally I don't know anything about this, unfortunately. Now, with these three different features, occupation transitions, meaning change of jobs, I feel will become more common in the future than in the past. Because in the past, when you have a job, we just stay on and on and on and on, right? For me, the job in IMF, they stay on for 30 plus years. But in the future, it'll be different. People would like to change the job. Another thing is the labor demand will also likely shift far more frequently in the future than in the past. Now, also based on McKinsey's report, I'll give you a few more numbers. The healthcare workers and professionals by 2030 will likely increase by 30–35%. Okay, so that's one. STEM professionals, science, technology, engineering, mathematics, will also likely increase. Now, then on the downside, that's on the other hand, demand for office support workers could decline by quite a bit. Computer, customer services, sales workers, demand for that will also be. So then what does all this mean? Well, it means that our formal education offered by colleges and universities will need to adapt to the evolving transitions and demand for labor in a post-COVID period. All students, no matter what areas of concentration, should at least learn some basic knowledge about STEM, automation, and AI. On-job and vocational training will become ever more important because the information technology evolve very quickly. So future workers should also learn how to become used to very frequent job changes, as I just mentioned earlier on, and occupation changes, and also try to learn how to excel in different environment situations. This is tough to do. All this requires one to keep learning, adapting, and training the ability for innovation. The bottom line in the future, I feel this way, is innovation. And that is, everyone will need to learn how to innovate, do things in a new way, right? Then excel in a new environment. The ability to distinguish those who will do well and who will not depends very much on that on the innovation ability. So therefore, for fresh graduates, you may have a tough job situation, immediately, but your future is really bright because the future offers you a lot of new things to explore. So keep learning, adapting, and training yourself. So I'll stop here. That's my word for the new fresh college graduates.
For young people, indeed, they need to keep innovating, keep learning, and it sounds like that we really need to start to rethink about the job market now going forward because time is changing. For instance, I mean, in an economy when some smaller businesses have been affected in the past few years, but other sectors have been growing rapidly in China. For instance, I heard that many young people are seeking jobs in video game industries, and they are making some pretty great looking, handsome salaries there. And so for young people to seek jobs, we need companies to offer jobs. Many companies in China, they have actually showed enough resilience in the past 3 years through the worst of the pandemic time. Now, in a post-pandemic era, what can companies do now to create more jobs and to attract talents?
Again, also great question. Difficult to answer. Well, I mean, look at COVID-19, right? Really, COVID-19 has given all of us a horrible time, hard time, horrible time, a huge challenge, and also a very painful experience. Unfortunately, this is still ongoing. It's not over yet. So in this difficult, challenging environment, it's very natural. Some businesses have been doing okay, while others may have been performing poorly, and some even have failed. So what is important is for all of us and also businesses to learn from the past experience and the lessons and do better in the future. Now, when we look ahead in a post-pandemic period, there are important opportunities that will be available to us. I would like to mention, say, 3 or 4 areas, just for information. First, as I mentioned also just now or earlier, digitalization has a vast potential to be tapped. As you said, the students probably can go to the gaming industry. Mm-hmm. Could we ever imagine, Lily, if digital technology were not available during the past 3 years? I would have never been, able to do anything. So it would have been unthinkable if that were not available. Second, I also mentioned earlier, China's economy had a vast potential for further growth in services and consumption-related industries. So again, opportunities are there. Third, the COVID, pandemic shows the great importance, not only important, great importance of a well-established medical sector. It is imperative that sufficient resources be invested in this particular area and to more effectively deal with similar pandemics in the future. These pandemics will surely happen in the future. We have to be prepared. Mm-hmm. Finally, green transition and financing, of course, is an area everybody is talking about and every day, everywhere. So this area offers also huge opportunity for firms and individuals.
Dr. Lin, so we are right now in a context of a global poly-crisis. How do you think can nations to accelerate or maybe upgrade their cooperation in order to support economic recovery? I mean, we are talking about this from the perspective of policy making in international cooperation. What lessons can we learn from past experiences?
This is truly an excellent, important question. It's a big one. I wish I could give you a clear answer, but I have to be honest. I don't can. So let me try to search for some clues to the extent possible from the past experience, from historical experience. So looking back, the world actually has not been short of economic or financial crisis in the past 7 or 8 decades. The aftermath of the World War II in the 1940s, the oil price shocks in the 1970s, the Latin America debt crisis in the 1980s, the Asian financial crisis in the 1990s, and the global financial crisis in the first decade of this century, and then the COVID crisis. Now, when these crises happened, were upon us, except the COVID crisis, the global community was able to unite and take coordinated and decisive actions. So unfortunately today, it's very different from the past crises. As I said earlier, we are facing not just one, but several crises overlapping with each other. More worrisome to me is that the world is not working as one, but becoming increasingly fragmented. That's why even in Davos, the theme of the meeting, the Davos meeting, is called cooperation in a fragmented world. Now, in the face of this serious situation, poly-crisis, what's the way out? Probably let's look at history. Now, history may offer some good lessons, good experience, or may offer a helping hand. Now, we recall that in 1944, some 80 years ago, in the aftermath of the Second World War, the world faced 2 massive tasks. One is to deal with the immediate devastation caused by the war. And 2, to lay the foundation for a more peaceful and prosperous post-war period. So at that time, 44 nations got together in Bretton Woods New Hampshire, the United States, to discuss this issue, particularly focusing on the international finance, trade, economic cooperation, development, all the issues. At that time, these nations chose collaboration and for the global common good. They leave national interests aside, recognizing that if countries work together in a common interest, they will help each other in times of difficulty and need, and then everybody will prosper. Now that idea was kind of simple, right, when you look back, but very powerful. So that idea has stood the test of time ever since 1944 through today, despite the enormous changes that have taken place in the global economic landscape. Now the world today, as I said, also faces similar tasks. One, to urgently tackle ongoing crises. Two, to build a greener, more resilient, and more inclusive tomorrow for ourselves and for next generations. So I believe, personally, it would be useful and very important for policymakers worldwide to sit down, meet, review the past experience, discuss and renew the spirit of working together, the so-called multilateral cooperation and collaboration. I think history has proven that this will be the most effective way to tackle the crisis for ourselves and for the future generations. So my word, I try to leave to the audience is that global challenges require global solutions. Only working together, everybody will be better off, and we'll all be able to prosper, to grow, to be happy, to be in a peaceful environment. So I'll stop here. So global challenges with global solution.
Indeed, I mean, history is a mirror giving off reflections of today, and they say that teamwork is the greatest art of is the greatest form of art that many need to be very delicate about. So we'll see how things go. Thank you so much, Dr. Lin. I know those were big questions, but thank you so much for your insights on where things stand here on China's economy and for your forecast for this year's economic growth. Thank you for your time, Dr. Lin, and thanks for being with us. And that was Dr. Lin Jianhai, former Secretary of IMF and Vice President of the International Finance Forum. Now, through my discussion with him, we found out that China's growth potential remains strong, but challenges are still here. And there is place for policies to play a role in boosting consumption and restore confidence in the economy. Thank you so much for being with us, ladies and gentlemen. And with that, I'm wrapping up today's special coverage of Econ Talk. I'm Lily Lu. Till next time, bye for now.